Hey everyone, welcome back to another show. This is Zach Childress, the president of the Alabama RIA, and we have Mr. Steve Payne with us here today, and he is our director of education, and our show today is all about the market overview. And we have several more of these coming out each month, right, Steve?
That's right.
Every month we're going to be doing these. It's all about market overview. We're going to be taking a look at where the current market is versus where it was 1 year ago, so that you guys can kind of stay in the now, stay in the know, and really get an idea. And some of the things we're going to be talking about, Steve, is like the volume. How much volume was sold this month versus last year?
Right.
We're going to be talking about listings and time on market. Some other things we're going to be talking about is even price points, right? Like where are things selling at today versus where they're selling at or were selling at a year ago.
Yeah.
And I think some other good things to talk about is really, you know, what's the number one house that's being sold out there right now? And,
price range?
Well, that and really type of property, you know, and so I want to pick your head on that a little bit, and also just kind of from all of your data gathering and sense of knowing the market, as long as you have, I want to get into a little bit about what you think the market overview is going to be like as well. And so we've got a lot to cover here, man.
We do.
Are you ready for this?
Short time to do it.
Short time to do it. How you feeling, Steve?
I'm great.
Are you?
Yeah.
You guys, I had to get Steve to come in and do this. He's not accustomed to this.
No, I'm certainly not. But I hope to get better at it.
Oh, you will.
So pardon me.
No pardon. Listen, they're in it for the data, right? That's what they want to watch for. They want to know the data. And being someone who delivers data, you don't have to be very funny or anything. You just got to deliver data, right? And
that's right.
I'll be the funny one. Hey, listen, we're going to jump right into this. One quick message from our sponsors, so we'll be right back. Hey, welcome back. Thanks for watching. If you need any sponsors at the RIA, we have many preferred vendors that can help you in your business, from home inspections to appraisers to property management companies to insurance to closing attorneys. So, you know, I always say if there's a need that you have, you're going to be able to find that at the RIA, and that's the Real Estate Investors Association. You can find all of our locations at the Alabama RIA. You can meet our boards. Steve is on the board, and you can see who some of our chairs are. And so we hope that we see you at one of our up and coming meetings. We meet every single month, and you can find all that information on the site as well. So, Steve.
Yes, sir.
So for those of the ones that are watching this that doesn't or don't really know you, why don't you tell them a little bit about who you are and how long you've been in this business?
Okay, I've been in Alabama for a long, long time, since I was 10 years old, and I became an engineer for 30 years and 20 years, and then went into real estate 13 years ago. So my first client was an investor.
Really?
Yeah, so I've been doing investment properties for 13 years.
13 years you've been working with investors. So you've, I've been investing for 16, 10 of those here in this market. So you've seen the good and the bad too.
I have, yeah.
And that's really a test of an investor, isn't it?
It certainly gives them a path to follow.
Yeah, and what I mean by test is as in, like, in a good market, anybody can survive.
Yeah.
Right?
Yeah, that's right.
Well, if you can find the deals, but selling them is super easy. It's the tough markets that make people question if they should keep doing real estate investing.
Right.
Because, it takes longer to sell. Sometimes it doesn't go the way you want it to. And it's really a test of the longevity of an investor is the way I look at it. And, people ask me all the time, they say, Zach, if I was going to go learn from someone, who should I learn from? And I always say, find somebody that's been in this business long enough to see market cycles. So that they know what it's like in a good market. They know what it's like in a bad market, and they know how to transition from market to market, which is a great segue into our topic today, which is market overview.
Right.
And anybody who's ever been to our Real Estate Investors Association here in the Madison County area, in Athens, or even in our new location in Decatur, that has had a chance to meet Steve or been to one of Steve's classes, they all know Steve is really big into the data. He understands that knowing where a market is will help us understand where the market is going. And a lot of times that comes from looking at past performances based on where we are today. And what are some of those indicators? And so I hope you guys get a lot of value out of these market overview interviews and this real estate talk show that we do. So, Steve, let's just dig in real quick and talk about volume. Let's just talk about volume, as in, we all know we're in a hot market right now, but really how hot of a market? If we take where we were last month and we look at it from a point of view of where we were the year prior to that month,
Right.
where are we really in volume?
Well, we're compared to last year, which is what we're doing. Last year was awesome. It was a good year last year.
Last year was a good year.
This year's even better.
So where does that volume look like?
We're looking on our volume. We're 16% higher this year.
Do you have the dollar number?
I have the average sale price and the median sale price.
But not like 2.8 million or 2.6
I
billion.
do have that.
Okay.
It's 1.667 million.
So last month
Right.
was
in
1.6
December.
million in December.
No,
of
no,
volume.
I think that's probably including the whole year.
Yeah. Okay. So
I
that
think
was
it
the
is.
volume of last
Yeah,
year was
right.
1.6 million.
That's correct.
Is that right? That seems low. I mean, 1.6 million.
From January.
Oh, you
of
mean
last
as of
year
this year?
through December?
Yeah.
No, that's the volume. That's the number of houses that were sold. It's 1,667,000 houses.
Houses. Okay. All right. I
In
just want to
Madison
get
County
not
alone.
volume as in price point, but units of houses. 1.6
Right.
units of houses. 1.6
No.
million.
No, I think, yeah, that's right. That's what it's saying.
It's got to be, because there's no way we did a 1.6 million in volume last
right.
year. I mean, three houses could equal that if
Right.
it's a $500,000 house.
Well, no. That is the volume and price because the quantity sold was 7,247 houses.
Okay. So then what's it saying of
You're right. That can't be.
That's what
Oh,
I'm
you
saying.
know what it is? It's 1,667,000.
Thank you. Sorry, I had to dig that out of him there. You guys saw that, right?
I gotta
was like,
watch-
there's no way that's 1.6 million.
Yeah, I gotta watch my
1.6
decimals.
billion. Okay, that seems more realistic. Okay, so the total volume of last year was $1.6 billion.
Correct.
And I would be curious, and maybe we can talk about this next time. I would be curious to know what the volume was last December versus a year ago December.
That's what this is.
So that is the
And
month
a
of
year
December.
ago, in December of 2017, the volume was 1.4 billion. So it's 1.67 now. It's 1.43 then.
Thank you.
So it's gone up.
1.6. Now I'm getting the data. So 1.6 billion was December 2017, or 1.4 billion. 1.6 billion was 2018 in December.
Right.
So that's the 16% growth that you're talking about.
That's right.
So this is something, if you guys are watching this, you should really keep up with this. And here's why. Because next month when we do it, we we should just keep looking. Is that 16% growing? Are we now at 17%, 18%? And the things we have to watch out for is when that volume starts going down to 8%, 4%, which means now we're not selling as much as we were the previous years. And that could definitely be a sign that we're slowing down. And I'm not here to create fierce speech, but I am here to say all markets correct themselves. And for us to have access to this data gives us an ability to keep a monitor of that. Right. $1.6 billion in volume in December. And people say December's the slowest month.
Well, I think that's for the entire year personally. I might be wrong, but there's no way there's 6,000 or 7,247 houses in one month. Right.
You're probably right. Even if it is a year. I mean,
that's a lot.
That's a lot. That's a 16% increase year over year as in volume sold.
Exactly. So. You got it.
All right. So, Steve, talk to me about listings. What did we see in December in listings? Like, how many listings were put on the market in December versus a year ago?
I don't have that.
You don't have that?
Just for the month?
Just for the month.
Yeah, I don't have that information.
What do you have on listings? The year?
I have the total number sold. I don't have the
solds
listings.
Is good. Let's talk about solds.
That was 7,247.
That's for the year.
Sold for the year.
For the year.
Yeah. I didn't divide it up into months.
Okay, well, that's easy to do. We can use a calculator. Because that's really, when we're doing market overview, that's what we're doing, month over month.
Okay.
So let's look at number of solds. How many were in the last year? Use your data.
7,247.
7,247 divided by 12. So that means on average 603 houses were being sold a month.
Mm-hmm.
Okay. What about in 2017?
That was 6,656.
6,656 divided by 12. So that was 554 houses sold average per month. Wow, that's like almost a 10% increase on average solds per month. So all those indicators are showing that we're moving forward. Okay. Let me ask you this: do you have the average sales? So is all of your data based on 1 year aggregation, or is it on a month?
It is.
Okay. So then next month we'll move it down to a month. Okay, that's fine because we're doing a year end really. So let's talk about pricing.
Okay.
So what was the average sales price for 2018 versus 2017?
Okay, the average sales price at the end of December for 2018 was $230,000.
$230,000, and that data is encompassing what? Madison County?
Mm-hmm.
This
is all just Madison County. We have other counties separate.
Okay, so Madison County. What was the average sales price in 2017?
$215,000.
$215,000. So it didn't go up that much. So it was just a little bump.
It's a 7% increase.
Just a little bump, right? So 215.
Well, in 2017 we increased quite a lot.
Oh, I know. 2017 we jumped tremendously.
So this is just over 2017.
7% increase. Yep.
Right.
So that's kind of interesting because I remember when we were doing trainings on this stuff, that our medium price was like $140. Like $150.
It was.
And remember, we were like going back and forth on this because then you would say, "Oh no, that's not it. Now it's gone up." And I'm like, "How much?" You're like, $180. I'm like, $180.
Yeah.
And then now it's all the way at ending out of last year at $230,000.
That's the average.
That's the average, right?
Yeah.
Ending out the year. My question is, do you think our market's going to be able to sustain that type of medium price point at the rate we're going?
No, I don't.
I don't either.
It's going to slow. When it slows, we're in such a super seller's market.
Yeah.
That once it starts swinging back to the buyer's market, the prices will start creeping down.
And the question
or at least stabilizing.
And the question always is, when is that going to happen?
Yeah, of course. Right. Well,
when is that going to happen?
You got to take appreciation into account when you're
100%.
Figuring out.
And here's the other thing. Steve, I've been doing this a long time too, and And people always say to me, they'll say, Zach, do you still flip in markets when they're going down? Mm-hmm. Yes, I do. What Steve just said is what I look at. So like when we're at a market that's hyper like this, and let's say we're seeing an appreciation of 3, 5, 6%. We don't really get like the double digit appreciation. Well, some of our little areas have, but we're not known for that. I don't take that into consideration when I'm factoring in my ARV right now to sell at. If I get it during the remodel and the resale, great. That's gravy on the cake. Mm-hmm. But when I'm in a market and the market's going down, I do look to see over the last 6 months, what has this market done? If it's dropped by 5%, I will identify, okay, well, what's the ARV right now? Minus 5%. So that I can prepare myself for if it takes me 6 months to sell that property, that I'm going to lose 5% because of the declining market that we're in.
Yeah.
And that's a great understanding when we're looking at average sales price. And I think as we move through this year and people start seeing it month to month, they'll start to be able to collaborate that data and start to see like, hey, we're growing, we're slowing down, we're stagnant. And that's just a sign of all markets. They all do that. So 230, I'm with you, Steve. I don't think they're going to last that much longer. I really don't. I think we'll make it through this year, but I think we'll slow down by the end of the year, honestly. That's the same thing with multifamily. I mean, multifamily's crazy right now. And here's the thing. It's going to get worse because the interest rates didn't go up like everybody was predicting they were going to do, right? Everybody kept saying, oh, interest rates are going up. Multifamily's going to get hit hard. Multifamily's going to get hit hard. Well, interest rates didn't go up.
And the prices are still going up.
And the prices are still going up.
Yeah.
Right. Because in multifamily, it's all DCR. It's all debt cover ratio. And when rates go up, prices can't keep going up because then the lenders have a hard time loaning on those types of assets. And so it's a reflection. If you want better commercial properties, wait for interest rates to go up. You're going to get better pricing. You may not get better payments, but you're going to get better pricing. And so something to consider.
And rent's going up as well.
I know. I love that.
That increases the value of those.
I love the rents. I love that. It's just I got to get all these leases to come due so I can increase my rents. All right. So let's move on to the next one. Do you have some data on there versus list, or do you have list versus sold, or some factors from last year?
I don't.
Okay.
I don't have that. I do have the inventory.
Yeah, that's great.
Oh, yeah. It's because when you're buying a flip and you put it on the market, you can expect, it to be on the market on an average of 4 months.
So this is like days on market.
Days on market. It should be around 4 months. It went from 3 back up to 4 in the last month of December. In December.
So this is 3. December's data. Okay.
No, this is the whole year.
The whole year's data. Okay.
But this is December's increase.
Oh, I see. So we went in December of 17, we were at 5 months worth of inventory.
No, we were at 3 months.
This is December.
You're
5
right.
months of inventory. By April, we had dropped down to 3 months of inventory and held 3 months all the way into pretty much November, and then it went back up to 4 months. You know what? That's a pretty interesting statistic because I do a lot of national data collaboration, and the average months of inventory nationally from West Coast, East Coast, and all in between is 4 months.
I'll be done.
And that is the national average. And that's a great number to know, and here's why. Because when we're looking at markets and we're predicting markets in a way to say what type of marketing should I do, this is a great number to look at, and here's why, Steve. And I teach this theory. I'm just checking our time, but is that when you have a market where, if we know the national average is 4 months of inventory, and I'm looking at a market and it's holding 6, 7 months worth of inventory, then I know that there's a higher opportunity for me to find a deal on the MLS. Because there's so much inventory, right? Meaning that there's a lot of competition. Sellers got people trying to sell everywhere around them. You look down the street, you see 15 for sale signs on one street.
Exactly.
Yes. It takes them longer to sell though. So usually there's a counterpart to that. If there's high months of inventory, there's high days on market. Where when we're looking at markets where, let's say, we know the national average is 4 months, but we're looking at markets that are like 2 months. Well, then we know the likelihood we're going to get a deal off the MLS is about zero.
Yeah, yeah, exactly.
Because
you're so right.
They don't have to sell, right? The competition isn't there.
Right.
They're the only house on the entire neighborhood that's for sale. So if we want deals, we have to then look at that data and say, okay, well, I need to get really good at direct response marketing, some form of advertisement. I've got to find private seller leads and not public seller leads in that aspect. And so I'm always looking at this data. I mean, 4 months is average. I'm surprised that we've gone up from middle of last year.
3 to 4.
Yeah, I'm surprised.
Well, that's December. That's your usual periodic slowdown.
Is it? I could see, and I almost felt like in let's see, January, February, March, April, like March, April, I felt like we would have seen a spike because everybody wants to sell before summer to get their house on the market before new schools start, but we don't see a spike there either.
We do in Limestone County,
Yeah.
and we do in Morgan County, but Madison County was pretty steady. 3
Yeah.
months is unbelievable. I mean, that is
Yeah.
low inventory.
Yeah.
That means you get multiple offers on all your houses.
Yeah. 3 months is low, especially imagine 2 months.
Yeah,
I've seen markets out
In
there
Madison?
that are 2 months.
Madison was.
Yeah.
And see, Madison was bringing this down.
Is that what it was?
Madison City is awesome. Yeah, it's
That's where I
2 months.
live.
I know.
You've sold me 2 houses over there.
I did. And the prices have gone up since you bought them, too.
Absolutely. I think mine, from what we negotiated on that house that I bought, it's grown almost $100,000 in equity. I just had it appraised.
I believe it.
Yeah,
I do.
And I remember sitting there thinking when I had the appraisal done, I was like, dude, that's $100,000. And what if I had that house? 2 years now, maybe? Something like that.
At least.
17, 18, yeah.
The interesting thing to me is like these prices going up 16%, or not 16, they went up 7%.
What sales price.
Yeah.
7%.
Normally before 2008, the prices were the increase in price was always 3%
I
per year.
remember that. I remember that.
This is more than double.
I remember that because I remember I was doing a ton of research over here before I moved back home, and all of my data was like this market was like a 3% market, 3%, 3%.
Always.
It would shift down 3, it would go up 3. It would shift down 3, it would go up 3. I remember that. And you know what I have to say is I think this 7% has a lot to do with our city in general. Because we've got some pretty good people on our board right now, as in bringing new businesses in, bringing new employment into this market, bringing entertainment into this market. I mean, you think about it's like 50,000 jobs are trying to come back into the city right now, from the FBI to the plants to you name it, to the service industry. Think about all the amount of service jobs that are about to hit over the next 3 to 4 years.
Yes.
I do believe that will bring our average income down a little bit because.
Oh, really?
Well, yeah, I do because
These
here's
are good
one.
paying jobs.
Well, I mean, the service industry. If you think about it, the state of Alabama's average income is somewhere around $30,000 a year.
Right.
Our area, Madison County, was like 60-something thousand. Do you know that's the same average in San Diego?
No.
Yeah. Same
Wow.
average is it's like we were like 60-something. In San Diego was like 68,000.
That just floors me.
And and if you think about the cost of living, is night and day. The cost of a house, $230 here, is like $500 there.
Oh yeah.
And so I say that for this point to talk to kind of loop back around to what I was saying about bringing our average income index down, because we get that because of the government. We get that income because of the engineers, the biotech, the missile defense, the government. Those are all extremely high paying jobs. You think about all the 5,000 plus jobs that are coming in with the FBI, those guys, analysts and admin people, they're making between 70 and 100 grand a year.
Oh yeah.
You know what I mean? They're going to live like rock stars here in Alabama.
They are, because the cost of living is so low.
So low, and they're coming up from the Northeast, right? And so I think that's what holds our income level so high. But the amount of service jobs that are coming in, I mean, you're talking, $10 to $15 an hour pay jobs, right? And that's a good pay for somebody who's living here. But my point to that message is that I think the more of those we create, it will offset some of that higher intake. And I could be wrong. I mean, I'm just looking at it from an overview
It's
average.
logical.
Yeah, and so not that I think it's going to hurt us in any way. We need those service jobs. I mean, we do. If you think about everything that's coming in from all the outside malls that are being built, we need it. I mean, we need it to be able to keep providing the service. I don't think any of them will be able to provide the service like Chick-fil-A does.
Yeah.
I have to hand it to Chick-fil-A. I'm not trying to get off track here, but how many fast food restaurants do you walk into and there's 15 people behind the register?
Zero. Totally.
Like if our service world took on the same philosophy,
And you can't find a parking place.
no way can you find a parking spot. So they're doing something right. All right, Steve, I've got two other things I want to talk to you about. One is houses and one is just a complete overview. But is there any other data that you went and did some research on that you want to share with everybody?
Yes, definitely. I want to talk about Morgan County and Limestone County.
All right, let's go into Morgan County.
Okay. Morgan County is very similar.
Okay.
Unbelievably. But the volume, the 239,000 houses, which is surprising to me.
Okay.
I'm sorry, 239 million.
239 million.
Right.
In volume, it did in 2018.
It is million too.
Yep.
And that's 1,457 houses. That is a 26% increase over 2017.
In Morgan
Which was
County.
another good year.
In Morgan County.
In Morgan County.
Golly, who's in Morgan County? We have
Lots of industry.
Lots of industry. Decatur, which pushes most of Morgan County. Is Coleman in Morgan County?
No.
Okay.
Coleman County.
So you've got mainly Decatur that's pushing that volume right now. And
Right.
Hartselle. And Hartsville's growing. Listen, I do flips in Hartselle. And let me tell you this. Any property I've put on that started remodeling in Hartsville, we've had people come up and want to buy it before we're finished with it.
I know. Yeah. I've seen that too.
Yeah. And we just secured one, which was an awesome deal because we got one. We thought, man, look at this huge lot that this one's on. It's going to be great. We've got multiple people trying to buy it. We're not even finished with it. Well, what we found out is the lot's so big we can split it. And so now we're going to build a house on the empty lot that we're going to go get split. So we basically got a great deal. We're going to make a lot of money on plus a free lot.
Right. Yeah.
And if you know anything about building houses especially, which I've been down that rabbit hole a few times, that you make your money on what you pay for the lot. Like that's really where the money's made is how cheap can you get the land.
Right.
All right, so Morgan County, 239 million in 2018. What did it do in 2017? Do you have that data?
Yeah. It was 189,000.
189 million.
I'm sorry, million.
That's a big jump. All right, what else you got for us?
26%. The average sale price, and to see this is still much lower than Huntsville. That's why people are buying in Decatur. You're getting more house for the buck.
That's true.
The average sale price was 164,000 in December last year.
Okay.
Versus 145,000
Wow.
in December of the previous year, 2017.
Wow. That's a big
That's
jump.
a 13% increase.
That's a big jump. Man, do you think Morgan, especially Decatur, do you think that'll push 200,000?
Yeah, I do. If Huntsville keeps climbing,
Yeah.
Decatur will keep climbing.
But feeding into the service.
Exactly.
and
There's a
feeding
lot
into
of
the
people
jobs.
live in Decatur that don't want to live in a big city.
That's very true.
That's what happened.
That's what happened to Hartsville. I mean, not Hartsville, but why can I always not Hazel Green, but
Yeah.
not Hazel
Meridian?
Green. No, out Jeff Road, north of Madison. Is it not Hartsville? It's Hazel Green.
Newmarket.
No, not Hazel Green. It's
There is a Hazel Green out there.
Hazel Green is where I have some rehabs.
Yeah,
at.
right.
I'm talking over off of Jeff.
Newmarket.
North
Jeff.
of Madison.
Oh,
Why can I not think of the name of that city out there?
there's not one that I know of. A city off Jeff Road?
Well, it going up.
Yeah,
it
keep
takes
going
you out
up.
there.
Right.
As soon as I say it, you're gonna be like, "Oh, I know what you're
Fayetteville?
talking." No, not that far up. Okay. Harvest. Thank you.
Oh, that's the other way.
No, north of Madison.
Yeah, it is
Madison,
north of
north of
Madison.
Madison.
You're right.
Yeah.
You're right.
That's the same thing that happened to Harvest. Is my point is like Harvest was an area that wasn't overcrowded, wasn't overpopulated. You could get houses there for 100 to 130,000, and it exploded.
It did.
I mean, houses now out there are like 160, 180, 200, 250 because of what you just said there. Same philosophy that people who live in Decatur were living in Harvest to be able to say, look, I want to be away from the big city, but now it is almost grown together.
It has, yeah.
Yep.
That's right. It's creep. It's what do they call
They
it?
creep in it.
Suburban creep.
We call them bedrock communities.
Oh, okay.
So, all right, what else you got for me, Steve?
Okay, we got limestone as well. Oh, the absorption rate in.
Yes. Look at that chart.
Yeah, that's the Decatur chart. Should we?
Almost 2 months in February of last year. That was 3 months of inventory. It went all the way up to 6 months in May. Dropped back down to 4 by June. By August, September, it was back up to 5. By October, it was down to 3. By November, it was up to 6. Man, that is all over the board.
It was.
Wow.
And now it's back down to 4 again.
Now it's back down to 4 again. Wow.
Yeah, that one's got some excitement going on.
Yeah, it makes you wonder. Look at this, though. It looks like there was a stagnant period from March all the way until May. It just went from 3 months to 4 months to 5 months to 6 months of inventory. It's like no one was buying there during that time.
Right. You know, the thing that shocks me about Decatur is it hasn't grown in 20 years.
Exactly. Like there's no new industries coming in. Well, they're trying to get some things, but not like what we're doing.
Right.
I am surprised about that.
Right. But as Huntsville grows, I think Decatur is going to grow because a lot of those folks
has to. It has to.
Work out at the Arsenal.
Yeah, it has to. Because of cost of living. I think that's the thing. Just like I think Athens is going to have to grow too. Let's talk about that.
Okay. Let's look at Athens real quick. I have to pull it up. Athens houses.
What was the volume?
The volume was 444 million.
444 million. It did more in 2018 than Decatur did.
Yes.
Wow. But what else encompasses that or limestone? Athens.
A lot of builders are seeking land.
That's so true because you know what? I was on a big project with a student of mine locally, and it was like 500 acres of land, and we're trying to build on it. And man, people were coming in trying to buy the land from him. They were buying more land. They were doing more building, and it was like a lot of apartments and new subdivisions. I mean, you got Canebrake out there that kind of set the foundation of what that area could do when it comes to subdivisions and high-level subdivisions.
Right.
And so,
see, the builders, like you said earlier, they've got to buy that land for under $30,000 an acre, or they're not going to make any money.
that's true.
So they're not going to buy it.
And listen, when we were going through that deal with the city of Athens, there was somebody who had just bought a bunch of frontage. It was like 200 plus acres, and they paid $35,000 an acre. Yeah. And the guy that I was working with, he was getting offers between 30 and 35. You know, that just goes to tell you, because I know a whole world of builders here, and they're accustomed to paying 15 to 20 for acreage, right?
Exactly.
And that's what they want to pay for. And so when you seeing people come in and going, hey, I'll give you 35 for it, you know that there's a demand for that land. And that's like top dollar, I think.
It is.
I do. I agree.
It's going to go away. That you can't find land right now in Limestone County. I mean, I've been looking for clients.
Look, I was digging around Madison for some acreage. I wanted like 2 to 3 acres that I could buy, build a house on it, and be good, you know? And I've looked and looked and looked and looked, couldn't find nothing. And anything I did find, I mean, they were wanting 50, 60,000 an acre for it. And I was just like, that's not it. But then, through my relationships, through my connections, I had someone bring me 10 acres in Madison for around $10,000 an acre.
Oh, talk about Ooh, that's sweet.
No, it's raw land. It's still got all the trees and everything
Yeah,
on it.
yeah. Well,
But
that's okay.
my point is I said, look, I'll take it.
Yeah.
Like, I'll take it. I'll take that.
Yeah,
I
of
want
course.
that 10 acres. My intent's not to build houses. My intent is the first year, get it all cleaned out, get it all ready to build on. Year 2, come in with septic, electrical, sewer, curbing, get that in there. And then year 3, build a house on it, right? And I don't need all 10 acres. I just need the front 2 acres.
Mm-hmm.
So all the back 10, as they say, my back quarter,
Yeah.
can stay like
It
that.
can be a park.
That's right. Actually, it is a park. The greenway runs through the back quarter of that land, and the running track runs through the back quarter. So
It's just terrible.
I'm excited about it.
That action is what makes you so successful too. Your ability to just boom, recognize a good deal and jump on it.
Yeah, I'm not gonna wait, man.
I know.
I'm not gonna wait. But that action was created with confidence over the years, right? When
Sure.
you're new, you don't have that type of confidence. You're questioning everything. Is this property really going to sell for that? What's the value of it? What's this? What's that? All of that dialogue in your head is what slows you down.
And
right?
it should. If you don't know, you got to be careful when you're starting.
Yeah, and like for me, I can afford to make a mistake.
Yeah,
That's
true.
And there's a lot to be said.
I
by
hadn't
that.
seen you make one yet.
Well, I appreciate that.
I'm so jealous.
But that's what that helps me too, though, right?
Right.
I can go into a project and be like, hey, if we make a mistake, I got us. You know
Right.
what I mean? So
Yeah.
All right. So limestone, 444 million.
Right.
That's a big number.
That's 1,981 houses that sold in December. Throughout the 2018
Oh wow.
versus 1,805 in 2017.
Here's what I'm curious about. It were a lot of those rental properties. What was the average sales price there?
This is all houses.
Okay.
And so the average sales price was $224,000
What?
in Limestone County.
That's all the new
Unbelievable.
subdivisions. That's all the new subdivisions.
Which was only an 8% increase over the previous year. But the previous year was an awesome year in Limestone
that's
County.
true. But that's a test of all the new subdivisions. When you look at Decatur, there's not a lot of new subdivisions going on in Decatur.
You're
Not at
right.
all.
Yeah.
So
There
that's
will be.
Oh, I hope so.
Once they start growing,
If they will grow.
I think they will now.
If they'll grow.
Yeah.
So let's do this. Let's start bringing this to a head for everybody. What's the number one house being sold right now, Steve, that you know of?
The very affordable houses
Like
are the
under 200,000?
fastest selling houses. Yeah, like 160,000 because your payments are getting up close to 1,000 a month.
Yeah, I agree.
They're like those houses where the payments are less than 1,000 a month are just flying off
They're
the
going.
shelf.
First-time home
offers.
buyers can take them. They can afford them. Jobs are good. Things are working out for
Right.
them. Interest rates are low. What about? Are you seeing more ranch-style homes being sold, or double, or 2 stories, or what are you seeing in your opinion being sold?
In my opinion, the ranch style homes are still preferred,
Yep.
especially by the elderly population.
Oh, I'm sure.
And there's some people that are downsizing.
From the big ones.
Yeah.
What a great time to downsize right now.
Right.
Get top dollar for your big house.
But there's a lot of people moving into Huntsville, Madison
Yeah.
County, and all the others
Yep.
that are moving from an area where they
Accustomed.
look at these affordable houses and they say, "Hey, I can afford a $400,000."
Oh, you mean I can get a house with 5 bedrooms for $240,000?
Exactly, and those sell just real quick too. That's
Yeah.
not a problem.
We got one of those.
Mhm.
How many bedrooms is it?
It was 6, and now I think it's 5.
5. Yeah. Yep. Okay, so we're gonna end this with your market overview opinion. What do you think the market is right now, Steve?
I think the market is. I've never seen it better.
Good.
I mean, I've never seen the inventory so low where the houses are selling within 4 months
Yeah.
and getting multiple offers on most of the houses, at least half if it's a desirable house. I think that, that won't continue forever, of course, because
Right.
the market fluctuates,
Yeah.
normal cycle.
So what is your opinion about, let's just take it by quarter. What's your opinion over the next quarter?
Well, I don't see any slowdown.
None.
Except for the periodic normal December, January.
Yeah.
I think by March it's going to take off again, or even
really?
February. I have not slowed down.
Yeah.
I usually slow down a lot in December.
Yep.
And
December was crazy busy for me too.
since January,
I mean, we were finding, and I partner with people on deals all the time, and you and some other people in town, and I swear December was like I was going to the bank getting cashier's checks constantly in the month of December. I was like, geez. And and I'm not trying to slow down. I mean, my opinion on it is buy them while they're there, right? Because who knows, next month I might want one, there may not be one.
Right.
So I agree with you on that. December, and not just for you, even other agents that I had spoken to were like, I am super busy right now.
oh yeah,
It is a real estate dream right now.
it is for all the agents. And there's like 70 new agents every month.
Is there really?
Yeah.
Oh my goodness.
I mean, that's what happens when the market is really, really good.
Yeah,
People
yeah.
says, well, I'm going to get into real estate.
Well, it's the same thing from an investor world. If we go back 3 years ago, I was like loving life. There was like nobody buying anything.
Right.
I was buying as much as I wanted,
Yeah.
no competition. And then we go back to last year, and it's like everybody and their mother wants to invest in real estate. And there's nothing wrong with that. Let's be clear on that. I mean, it is a great avenue to create extra money or even build wealth from it, or maybe even become a full-time job for yourself, or maybe you're in a career that you're just like, I want out. And real estate will give you that, from flipping real estate to buying rentals to creating cash flow. But the biggest thing is you got to get educated. You got to learn what you're doing so you don't make a ton of mistakes. I absolutely say get out to the RIA, come out, meet Steve, meet myself, meet our team, look at what we're doing and how we're doing it, and the classes we hold and the things that we do for you. But there's a lot of mistakes that can be made.
It's always a surprise when a new one comes along.
It's like, whoa, where'd this one come from?
Yeah.
Hey, and I've got a new book out. Actually, you might want to check it out. It's called The 24 Mistakes All New Investors Make. You can get a copy of that at 24realestatemistakes.com. If you want to kind of get an idea of what some of these mistakes are, this book was put together over the many years I've been investing, 16 years. And the last 10 of those I've been able to travel around and teach and speak all over this country and get to interview investors from all over. And so the book is actually more of a Cliff Note version of one very important question that I asked everybody that I ever talked to, and which was, what was the number one mistake you made? And so that's where the book came from, was just from all these investors, these thousands of people I talked to. And it's free. It's an ebook. You can download it, 24realestatemistakes.com. Check that out. So, well, Steve, I think that your opinion on the market is very bright. I think that's great. I know that means good for you when you have real estate. It can be tough trying to find real estate in this market, but that's where getting trained and building relationships comes in.
Watch those interest rates. When they really start climbing, things might change.
Yeah, and I'm okay with that.
So that's what to look for. So
I'm absolutely okay for the market to change.
I know. I mean, the multifamily, I mean, golly.
Yeah, and maybe we'll have some time to talk about multifamily next time. So, Steve, thanks for being on the show.
My pleasure.
We'll do it again next month, okay? Hey, guys, Zach Childers here with another market overview. Stay tuned. We'll have another one coming out next month. Check out our website. See what all we've got for you. We've got lots of other videos, from our real estate investing talk shows to our interview with experts, all here for you. Please come join us out at the Madison County Real Estate Investors Association.com. It's actually MadisonCountyRIA.com. Or if you want to check out any of our other locations, just hop on over to AlabamaRIA.com. We'll see you next time.
I'll be there.
See you guys. Bye.